Good morning and welcome to the Money Matrix. I am Dion Pouncil.
And I'm Dominique Broadway. Welcome to another very exciting day in the markets. Please also do not forget that investing and trading should happen at your own risk. So please do your own research before making any trading or investing decisions.
Yes. So one of the things that's top of mind for me and a lot of people on Wall Street are that the equities are starting to retreat and gain momentum in that retreat. Now, what I will say is the SPY, the VTI, and the QQQ have all fallen below their 50-day average. And if they continue to fall this week, and if they close below their 50-day moving averages this week, I will begin to start putting on some sell side trades, and I'm going to do a special pop-up live for Wall Street Academy students on how to make money and stay profitable in a potentially decline and or recession. Now, some of the instruments have not only fallen below their 50-day moving average, but they've also done a depth cross where the 50 has crossed below the 200. So I will be doing a special Wall Street Academy live session if those major indexes close this week under those averages. So stay tuned to that. That will be an extra exclusive bonus for our Wall Street Academy family, okay? Now, so we'll hop into the news. Kicking it off, WTI is battling with the war going on, and now oil is struggling essentially, and now is a little bit down. It was on charts to reach a record of $100 a barrel until the Israeli and Iran war started to pick up, and now WTI is struggling. So we will keep our eye on West Texas Instrument, which is the main oil industry sector ETF, and based on the futures here in America. So we will keep our eye on WTI as it fluctuates amongst the amongst the Middle Eastern woes that are going on. Dominique?
Interesting.
Yeah.
Yeah. So many things going on at once. Yes. So heading over into other news, Johnson & Johnson, as you guys know, we have a lot of companies that are releasing earnings this week, one of them being Johnson & Johnson, which we talked about a little bit yesterday, and a lot of the health issues that have been caused from Johnson & Johnson's products. But they did release their earnings, and apparently their earnings were, they actually beat their earnings estimate, but their revenue has fallen. Some of that actually being because they're still having issues with giving people health issues. And one of them with being their talc. So they have a lot of talc that are still in their products, and this is causing people to just purchase less Johnson & Johnson products. So their stock did fall after they released their earnings, but it was also interesting that they did actually decide to raise their quarterly dividend. They have a pretty substantial quarterly dividend, so they just raised their dividend by 4.2%. So now their quarterly dividend is $1.24 per share.
Oh, okay.
Good dividend.
Johnson & Johnson. All right. Now, for next up, Morgan Stanley. Morgan Stanley topped expectations and beat the analysts' estimates, and their wealth management, trading, and investment banking sectors drove that increase. Okay. The bank said the first quarter profit rose 14% from a year earlier to $3.41 billion, or $2.02 a share, which helped by the rising results of its three main divisions. The revenue rose 4% up to $15.14 billion, and the shares of Morgan Stanley Bank jumped 3.6% pre-market in trading today. So we'll keep our eye on that. Sounds very familiar to what happened with Goldman Sachs yesterday. So this is another just reminder, right? The markets have kind of been in turmoil, going back and forth from inflation and recession numbers and all of those things transacting over the last year and a half or so, trying to recover from the COVID-19 things. And you see that the big banks, the trading firms, investment firms are literally increasing their profits specifically around trading, right? So investment banks obviously are investing into things, bigger picture, long term, and holding long-term investments, but trading actively daily and weekly are driving their profits in some of the most volatile markets that the markets have ever seen, especially since 2020-ish to now. Yeah.
All right. Heading over into other very interesting news. Donald J. Trump stock ticker symbol DJT. Their stock bounced up this morning after falling yesterday, fell about 18%. This stock has been like all over the place, okay? But yeah, so the stock fell 18% yesterday, but it actually went up about 1.5% pre-market because he will be launching a new TV streaming network, which I just cannot imagine a Trump network. But yeah, so anyway, he's announcing this. It's called Truth Social TV, which will be the new network, and it's going to focus on high quality news and entertainment that face discrimination by other channels and content delivery services. So very interested to see. But anyway, the stock shot up just a little bit, but like I said, it did fall about 18% yesterday. It's up about 1% today.
Okay, so Microsoft is literally cutting checks. They announced that they are making a $1.5 billion investment into the AI firm G42, which faces U.S. scrutiny for China ties. So Microsoft has been a very not only thought-leading company, but check spending company in these AI wars, invested into OpenAI and other big AI projects. This is their latest investment, $1.5 billion into G42, okay? So it's based in the UAE, the United Arab Emirates, okay? And Microsoft is basically trying to strengthen their global reach and leadership in AI, not just here in America. The Microsoft president, Brad Smith, will join the board of directors for G42, and the investment expands an existing partnership between the two firms, with Microsoft now taking a full minority stake in the company. The deal is unusual due to the heavy government involvement which comes with the U.S. scrutiny. So we will be able to see how this plays out, because a lot of the tech giants are getting squeezed by the government because the government is saying that they're starting to create monopolies.